Okay, hold on here, you guys. I'm sorry. I've got one issue. I'm trying to go live on Twitter, and I'm having a bit of a problem. So, sorry about that. Just one second. Let me get the Twitter feed going up, and we will be able to go right into it. Bitcoin. Oh, that's right. I got to switch before I go live. There we go. Weekly wrap up. Okay. Apologies here. Goodness gracious. And okay. Looks like we are live on Twitter as well as YouTube. So this is actually the first time that I'm doing this dual, so apologies if there's any hang-ups here. So good morning, good afternoon, and good evening to everybody listening wherever and whenever this podcast finds you. Thank you for tuning in and welcome to the Bitcoin Weekly Wrap-Up for the 1st of November 2019. This week's weekly roundup is sponsored by eToro. It's a really cool, neat platform. It lets you buy and sell Bitcoin safely and securely. You know, they existed before Bitcoin was even created and offer some really neat tools for newbies and experts alike. So if you're new to trading and you could just use something like copy trading, which lets you allocate a percentage of your portfolio to as many traders as you want to. You can find successful ones and find ones you think are doing good, and it automates it. So whenever they trade an asset, so do you. Find guys who know what they're doing, and then you basically get the benefit of their experience, and they get a benefit of a percentage of what you made off of them. So everybody wins. So if you go to digiknowcrypto.com/eToro, that's ETORO, you'll get $50 for free as well. So this lets them know that you're a listener of this show, which makes them happy and makes me happy. And then you get $50. So once again, everybody wins. But let's take a look at the price. Since the last weekly wrap up, Bitcoin's price has rallied all the way up to over 10,000, or it went all the way up to 10,000, about 10,500 if I'm not mistaken. And it's since fallen back down to the low 9,000s. And actually, let's just take a look at where it's at as of the 31st of October at about 9,100. That was pretty much the same as when I was looking this morning. And as of 31 October 2019, we're sitting at 9,100. So that's pretty, I'll take that. So the first story of the day is a holiday in Bitcoin. This was the anniversary of the launch of the white paper. On this day, 11 years ago, an individual named Satoshi Nakamoto used a Vision Mail email address and wrote the following email to the cryptography mailing list. He said, "I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party." He attached the white paper. For the most part, he received really no response from the cryptography cypherpunk community outside of Hal Finney, who was just a wonderful human being and a very principled cypherpunk himself. And since then, Bitcoin has grown in popularity and acceptance, and the future is very bright. I mean, obviously, it has grown, or none of us would be here. Most of us joined in the long after Satoshi first released the white paper, so we all have him to thank for that. The next story is on the topic of taxation and the new IRS guidance. So I uncovered their incredibly bad take on forks and airdrops a few weeks ago on the weekly wrap up, but there have been some new developments. Has this been within the last day or two? They issued some new guidance, and I don't know if I've talked about this on the pod. I think I've mentioned it, but I'm actually in the middle of some issues with the IRS for this very reason. Months back, if you remember, when they sent the notifications out, they kind of reported as there's like different tiers, different levels of the letters. The lowest level of letters, stating that they're saying, like, we know you might have been exposed to some Bitcoin and you may have bought in some, so you should look at your records. and let us know if you need to change your taxes, if you incurred any tax liabilities. The next level being that the IRS would write you and say, we believe that you may owe some taxes, but we don't have any specific numbers. You look over your records to be sure. And then the final level being like, we know that you have had some taxable events occur, but they don't know specifically, and they haven't actually kind of, obviously, unless they have records of specific exchanges. So they're saying you need to send in ASAP an amended 1040 to show the capital gains, and et cetera, et cetera, et cetera. My letter was actually beyond that. It was a letter straight to the point. They said I owed tens of thousands of dollars in back taxes, plus penalties, plus interest. And this was a mistake since they had received a form from Uphold, one of the exchanges that I used, that basically showed the total volume. So if I bought 10 grand in Bitcoin and then I immediately sold it, they'd show 20 grand in volume. If I sent in Bitcoin, if I sent it out, that would count as volume too, that went through there. And I didn't know as well that I need to file a form 8949. What I did was I took all the gains that I'd made and I just slapped it into, the capital gains Schedule D. Well, what I didn't do is I didn't file the form 8949, which lets them know the cost basis. When you bought it, what you sold it for, and then what that lets them know is X amount of profit. So if I bought it for 3,000, I sold it for 10, I have $7,000 in tax, in income for as far as a taxable event. So without that 8949, they just assumed all the cost basis was zero. So if I sold a Bitcoin for $10,000, they just assumed I just gifted it, and now I just got free $10,000. So it was a mistake on their part per se, but it was on me for not doing the right thing and sending in the right forms. And this also incurs some very steep fees and penalties for what they call substantial unreported income. So if they find out you owed, that there was, I had another issue where some of the income that I had from Amazon, it was like $500 or something like that, I reported it just in my just regular self-employed income. I didn't file the 1099 with it, so they couldn't match that up. So they just assumed I didn't report it. And for that, when you're talking about a few dollars difference, that doesn't really incur steep fines and stuff like that at all. But when you're talking tens and tens and tens and tens of thousands of dollars, it's substantial unreported income, so it has a much steeper fine that goes along with it. So I've been working for months to figure out the amount, and the amount of shitcoin trading that I was doing daily made the thing, it's a mess. To try to figure that out, it's just been a nightmare, because when I send one transaction out from one exchange and into another, sometimes they don't match up, and there's so much stuff going in and out. It's just been so another reason why I don't do a lot of trading these days anymore. So I believe I have it handled, and I'm waiting to see if they agree. It's not over, but I'm pretty sure I'm done with it. But I tell you, this is a warning, as lessons learned. We can disagree on how the IRS conducts itself and taxes and all that kind of stuff, but you don't want to end up in jail or lose everything because you got loose with your tax reporting. So my word of advice is don't invite the Department of Making You Sad into your life ever. Take advantage of all the benefits and write-offs and all that stuff that you can, but don't invite the Department of Making You Sad into your life. So back to the actual story, the guidance is that forks are basically treated as airdrops. But if you hold Bitcoin, let's just say you held Bitcoin in Coinbase, and they don't support the fork, you don't owe money. So in BSV split from BCH, if you had Bitcoin Cash in Coinbase, they don't support BSV, so you don't have to pay any taxes on it. If they eventually do, and you are owed the X amount of Bitcoin or a BSV because of the BCH that you held, then you actually do have to pay taxes on it. This makes it very weird for hodlers, since if you don't, if you do hold your own keys, but you don't care to take the time to expose those private keys to move the 10 Bitcoin diamond valued at $500 for the cost basis at launch, it's now worth $5, but you owe taxes on that $500. So if you never, when all this was going on, you're like, I'm not exposing my private keys to get Bitcoin Diamond or Bitcoin Forever or Bitcoin God or whatever all these goofy things were. The IRS now considers if you held 10 Bitcoin and you got the Bitcoin Diamond, the 10 Bitcoin Diamond when it launched, and what they count as the taxable event is when that new fork basically appeared on the blockchain, when that first, if you want to call it a genesis block, it's not really a genesis block, but whatever, the first block of Bitcoin Diamond came into existence, whatever its fair market value was, is what it's worth. So now you have a $500 taxable event for something that's worth $5. Um, for hodlers, like I said in 2017, this is a real problem. They have these dog crap projects that the IRS accounting standards is going to create a really big tax obligation, especially for people that hold a lot of Bitcoin. Um, and this is for projects that were overvalued, but for the few exchanges that support them, like some of these Bitcoin Diamond or Bitcoin God, they'll have like 2 or 3 exchanges that may support them. So they have low liquidity, but some sort of goofy high price launch that just craters eventually afterwards. And I think they know this. I don't think that this is goofy. I know that they say don't attribute to malice, that which should be attributed to ignorance, but I just don't think that they don't understand this, and they can't look at the charts of all these goofy airdrops and see, especially ones in 2017, launched really high and then just cratered out. And this idea that you now owe tax obligation is something that they never said you had to worry about. Now you do. Now it's worth $5, but you owe it on 500. It's goofy. So if you hold your own private keys, you're now. I think the reason I think they're doing this on purpose is if you're on Coinbase and they never supported these 100 random forks, you're fine. No tax problem. But if you hold your own private keys, you're now paying a fine to hold your own private keys. And this is an attack vector on long-term hodlers or known long-term hodlers, because all you have to really do is, what if somebody just wants to start bleeding them out by creating these rando projects, getting a few exchanges in on it so that they value it for a fair market value of a high price, and then they just exit scam it. And then now all these long-term hodlers are owing, well, this thing was worth $2,000 when it first launched. Now you owe it, and there's nowhere to dump it anyways, even if you wanted to. So sorry to go long on this last one, but I think it's important and important thing to consider and be aware of. Ripple is back in the news as it nears an all-time high of 1.7 million daily transactions. The last time it was at this point was in the bull market of late 2017. What's important to note is that no one really knows why this is. There's probably good reason for this. It costs 0.000003 cents right now to send a transaction. Not to move one Ripple, but just to send whatever, which would easily allow for fake volume to be pumped. I could create that volume less what it costs for Starbucks diabetes faux coffee. And admit no evidence of this, but in the interest, when you kind of look at incentives of the centralized Ripple execs to create an illusion of use and increase use over time, the abilities to create random wallets and be moving things all around automatically and just kind of set it on a bot algorithm would not be hard and would not cost them pennies, considering the amount of money that they've made off of this. And given that there's no real use, just announcements of partnerships consisting of Dave in accounting, who's looking at this project at a bank. A lot of times when you see this, like, oh, we're partnering with, not Morgan Stanley's not one of them, but they'll say we're partnering with Morgan Stanley. What they'll do is we'll have some low-level intern who they're saying, hey, learn about this Ripple thing, see if it works for us, open up a wallet, kind of send stuff around, see what you like. And they'll announce this as though they are about to merge as companies and get shares of stock. So just keep that in mind. There isn't any more, I haven't seen any of these, hey, MoneyGram is sending all their transactions or 20% of their transactions through Ripple, and none of these acknowledgments. So this volume is consisting of exchanges and traders and stuff like that, and probably people already inside on Ripple. I haven't seen it. There's no indication. There's no even attempt to indicate that this is new blood or use cases. The next one is Rusal, a Russian aluminum giant. It's a megacorp. And they've been hit really hard by the latest round of U.S. sanctions, and they are actually leasing one of their aluminum plants, or a part of it, and Karelia, to a startup Bitcoin mining company. And a small portion of the plant will basically be converted to a Bitcoin mining operation to take advantage of their cheap energy. It's not the size, it's not the location, it's not the room per se, it's the cheap energy that's already on site. And a lot of these industrial things, or industrial plants and stuff, they have on-site energy generation to run all this stuff. And it provides a great opportunity, especially if they're starting to wane, or a lot of times there's cyclic cycles in specific industries. I remember I lived in an area where there's a molybdenum mine, and basically the way it worked, and it was more due to the way that government regulations go, with they would mine out, they'd hire up, and then every 3 or 4 years, because of just average price fluctuations as well as development, which was planned into these normal kind of cycles, it'd go down. They do a lot of layoffs, and everybody was used to this. Is just how the mine's always been. And then they'd get approval for the next area, and then they'd start to ramp up, and then anyway. So a lot of these ebbs and flows, it provides opportunities for extremely mobile Bitcoin miners to come in. So they're now converting this wasted or underutilized energy, into digital sovereignty. And I think a lot of people miss this when it comes to Bitcoin mining energy usage. And I've realized I've talked about this probably the last few episodes that I did, episode 28, on Bitcoin mining energy use, which I think a lot of you would find interesting. But, Bitcoin mining seeks out underutilized or wasted energy, which I think is good. It's the cheapest available. That's why they are looking for it. It helps keeps the overhead low for them, and they use this waste, this lack of use, for a global good. And this is a trend I think will continue as price and demand increases over time. And really, what's so bad about not letting electricity be wasted? Not a dang thing, in my opinion. And the last story that we're going to be doing is another positive one. Hey, we're actually having a pretty positive week. A new company, CoinFirm, a blockchain sleuthing company, which wants to provide a way for those who had Bitcoin or other crypto assets stolen, whether this was through exchange hacks, exit scams, or just straight up, theft and stealing your Bitcoin out of your wallet, personal wallets, maybe. Now people kind of have a place to turn to. Right now, all you can do is basically go to the police, who will pretty much do nothing, likely issue a report that you can now use to wipe your butt with, because that's about all it'll be good for. So this is because a big shortcoming in Bitcoin is the inability to get insurance coverage over it like you would your home or your car or other assets. And I know that on other episodes, I have argued that, and I do agree with my guest, that Bitcoin is not actually property and all that, but I don't want to get into that sort of thing. But you can consider it an asset. And you can't get insurance coverage of this, short of larger institutions like Bakkt or Coinbase. There really isn't an option for the average person or average startup to try to get insurance or to try and recover what they lost. So, whether well, anyways, we don't need to go into that. I don't want to make this, try to keep this a little bit shorter this week. What CoinFirm actually does, CoinFirm does, is they're kind of like chain analysis. They partner with exchanges and other liquidity providers and things like that in Bitcoin. They gather a large amount of data from exchanges and all these other platforms, and so that they can see what's going out, what's coming in, to get a larger picture of what coins are where and how they got there. They will also use a lot of traditional techniques, like court orders to IP addresses associated with scams, hacks, or anything like that, or employ investigators as well that are familiar with kind of cyber sleuthing and digital forensics, to kind of go into the so-called dark web, which is really just the unregistered on Google sort of websites. But anyways, the dark web sounds much scarier. And this is the kind of places where sales of dirty coins and talks of hacks and things like that do occur. And they'll actually go through there, and it's almost like a human intel sort of deal, where they're actually going and try to find human intel sources on where X hack coins might have ended up. So CoinFirm, I keep it CoinFirm in turn would take a percentage of the recovered funds and offer the ability to partner with, you could partner with law firms to seek restitution if they can identify these individuals or identify wherever they may have ended up. And I think firms like this are a very good thing, and they are a necessary tool that needs to be established, so that free market solutions like insurance for your Bitcoin assets can enter the space for the average user. I think that that's an all-around good thing, and that's what's going to help bring more stability in the mind, right? Because this idea of you're a lot less concerned about the things in your home. You're a lot less concerned, which there are trade-offs with that, but you're not worried about going off on vacation per se and your house burning down. Like, you don't want to lose your stuff, but like you're not worried like, oh, if that happens, I don't know where I'm going to live, right? You have that insurance option and things like that. And I think that that's a lot of trepidation. Where if you could purchase insurance like you can when you buy something off of Amazon, and they always hit you like, "Would you like to buy some insurance on your $14 headphones?" Absolutely, don't do that ever. But it does give you peace of mind and the ability to do that for something of higher value. So that's it for this week's weekly wrap up. I want to thank you guys for listening or watching, whatever way you're consuming this content. If you could please leave a review on iTunes, just go to my website at didyouknowcrypto.com and click on the Apple icon to leave a review. Also, show some love to my sponsor, eToro, who offer the best place to buy, sell, and trade Bitcoin with the largest community, low fees, high security. And if you go over to didyouknowcrypto.com/eToro, you'll get that $50 for free, and then they will be very happy with me. So anyways, guys, I really appreciate it. Once again, thanks for listening, and have a great night. Off.